Hi all, Amy Ornelas here, Ornelas Property Management, Metro Brokers. Purchasing. If you are in the market to purchase a home, you definitely need to be pre-approved and not just pre-qualified. Difference. Being pre-approved means the lender actually verified your income. They contacted your employer, verified your income, that you worked there, the length of time that you've worked there. They verified the funds in your bank, so the last 60 days of bank statements. They verified your tax returns. They've gotten the tax transcript back that they order through the IRS and compare it to what you have given them for the last 2 years of tax returns. So pre-qualification is just you have provided the information. They run you through the desktop underwriting system. It gives you a yes or no if you're qualified, and based on the information you gave, it gives a dollar amount of how much you can afford without verifying all the information. So you definitely want to be pre-approved in this market. It is very vital that you are. Contact a lender now. Get a hold of them and get the loan app done, get all the documentation over to them that they ask for verifications of everything, and you'll be run through an underwriter. That way, all you need is the house. Once you go under contract on the house, anytime you have a new paycheck, a new bank statement that comes out, make sure you get it over to your lender as soon as possible. It helps alleviate any issues with going through the final underwrite process. Costs. Depending on the type of loan that you're going through, whether it's conventional, FHA, VA. If you're a cash buyer, there's no loan terms, which is great. We love cash buyers. You can close in a week. You can close within days if the property's vacant. Most of the time it's going to be a 3 to 5% down payment, depending on the program you're using, of the purchase price. Of that, you have earnest money that's going to go along with your contract. The earnest money goes towards your down payment or your closing costs, however you and the lender are working that out. Earnest money can be anywhere from $1,000 on up. If the property is asking for $2,500 in earnest money, in this market, I highly recommend that you double it, if not triple it, when you're putting the offer in. Money talks. That's really just what it comes down to. Other items that are going to cost you. You have your inspection within the first 7 days. That's anywhere from $250 on up, depending on who you use. It is totally your choice on an inspector. You can use the person that the realtor recommends. You can use your dad, your uncle, your brother, anyone that you trust to once over on the property, investigate everything, make sure everything's working, and so forth. Then within, as soon as buyer seller agree on any inspection items that the buyer has asked the seller to fix, repair, replace, whatever, you're going to have your appraisal cost. That's also within the first 2 weeks of going under contract. So be prepared for these costs. The appraisal cost is going to be roughly, I've seen them as low as $425, but in the recent weeks, they are more likely to be $500 to $600. Reason being, supply and demand, to be completely honest with you. Having to put rushes on the appraisals, because even though we order the appraisal in a timely manner, the appraisal companies are behind due to the volumes of buyers that are out there. So doing the rush appraisal, we just did one yesterday, and it was $600. So just be prepared for worst case scenario. So you have your earnest money, which goes towards your down payment or closing costs. Your inspection cost, if you're doing a CHFA grant or Adams County, NHF, whatever, that inspection cost can be taken off of the total amount towards your closing costs. It can be counted towards that. If it's conventional, it can't be counted towards it. Your appraisal cost goes towards your bottom line as well. So even though it's an upfront cost, it is part of your overall what you have to come to the table with. So that just comes off the bottom line, and then you just come to the table with that much less. Another way to be competitive with your offers, Take it as is. Take the property in its as is condition. As is where is what it's called. That means you're going to not ask the seller to fix, repair, replace anything that you find in your inspection. Doesn't mean that you waive your inspection. You still do your inspection. You have a right to inspect the property so you know what you're purchasing. However, you definitely want to have it inspected, and then to be competitive, take it as is when you submit your offer at the beginning. There are buyers out there that are offering over the appraised value. So example, your offer is $200,000. The appraised value is $190,000. The sellers want to know before you actually go into contract and the negotiation portion, if the property does not appraise, are you willing to come to the table with the difference? So in this case, the difference in this example is $10,000. Most buyers don't really have an additional $10,000 to put down. However, it doesn't take $10,000. I have several buyers that are they'll pay $2,000 over any appraised value, not to exceed their purchase price. So this particular example, if your offer's $200, it came in at $202, and we wrote it, buyer will pay $2,000 over any appraised value, not to exceed the $200,000 mark. You only pay $200,000. We cap it. I can go days and days about explaining all of this. Those are some examples of how to be very competitive with your offers. It's just thinking outside the box. The buyer can pay all of the closing costs for the seller. Closing costs are about $350 when it comes to the title company. The buyer can choose the title company and pay the seller's title policy. Depending on the price range, you're looking $1,000 on up. Sometimes less, depending on your price range, of course. So, I mean, the buyer can pick up all of these costs and make it look more attractive to the seller to where it's less out of their pocket, because you really want that house. I don't recommend doing all of these items unless it is the house that you absolutely want. So if you're out there doing multiple offers on stuff, pick and choose which offer is going to be stronger than the next and the next. And so, you know, offer number 1, number 2, number 3. Number 1 is the one you ultimately want no matter what happens. Number 2 is, okay, well, we'll negotiate on this, so forth. So anyway, it's thinking outside the box. You need to be open and willing. It's not the market that it was a couple years ago where sellers were paying people's closing costs. It's very seldom that we can even get a seller to pay closing costs in this market due to the multiple offers that are out there. Anyway, you guys have any additional questions, concerns, just give us a call, text message us. We'll get in touch with you. We could sit down with you face to face. We can call over the phone. We could Skype, whatever you need. We try to accommodate your schedule. Hope you guys have a great day. 720-261-6340. 720-261-6340. Call, text. Have a great day. Bye.